Hey there, okay, in this video we're going to discuss about the median line. Alright, Alan Andrews is best known for coming up with all these different kinds of names for these trend lines. Okay, and the median line, basically in order to draw the median line we have to find three pivots. Okay, there will be a pivot high and a pivot low, which is also known as a swing high and a swing low. And once we've found those 2 points we need to divide them into two. Okay, and once we've divided them into two we need to find the value of that and add it to the lower value, which will be the lower swing. Okay, and then once you've found the midway point you need to find the third pivot, which will be the next previous low or next previous high, depending on where the direction of the trend is going, and then you join the two up. So basically this is how it would look like. Okay, in a trend you'll have like a high here and probably like a low down here, and you'll join these two up. Okay, and if you're going like up in an uptrend you'll probably have like a low down here as well. What you would need to do is calculate the distance between here and there, and this could be, let's say for instance that we was on the daily time frame, and if for instance that equaled 8 days, okay, we'd have to divide that into 2, which equals 4. Okay, so that's 4 days, which is right round about there. Then we need to calculate the actual length in pips, so we have to divide it into 2 again. So if this was like 150 pips and divide it into 2 equals 75, then we find 75 pips from the distance from that high until that low, and then find that midway point, and we'll get it probably roughly around about there. And then we take this point here and we bisect it. Okay, now this point here will be referred to as point B, and this point here will be referred to as point C, and that will be referred to as point A, or pivot A, pivot B, pivot C. Okay, let's show you what it will look like on the chart, and we'll show you the uptrend version and the downtrend version. Okay, now this is the manual way of actually creating the median line. Alright, so let's go ahead and try that out. Alright, first of all I'm going to get this out, and I'm going to get my trend line property. I'm going to take the ray off. Alright, and that will stop it from being extended all the way out. Okay, now I need to find two areas, like a point A and a point B and a point C. So I need to find a high and a low. Alright, so let's go ahead and say like this one for instance. Okay, maybe zoom in a little bit. Alright, so we can get those points. You have to be pretty precise. Okay, you don't want to skip out on it. Okay, and then we'll grab a hold of our tool here, our crosshair tool, and we'll work out how many bars that is to that red bar. It's 6 bars, and we need to come back 3, find that midway point, which is basically on that little green candle there. Okay, and then we need to find the pips, which is about 18 pips there. It says 182, but we're using a 5-digit broker here, so that would be 18 pips. So we need to come back around about 9, which is around about there, and then we need to take another trend line and take it from that low and bisect it and just let it go through. So we can right click on this and then choose trend line properties, choose the ray to extend it out. Okay, alright, so once we've done this we need to sort of basically take in consideration these 4 trading principles. But before we get into the trading principles, I want to talk about how Alan Andrews came up with a way to work out when the market is going to basically reverse. Alright, and he's used a lot of laws of physics here, so he could try and apply them to the financial markets. Alright, mostly the stocks and the commodities that he was working on before. Alright, and basically what we need to do is find out where these cycles appear, and Alan Andrews worked out a way that, you know, when the principles were applied, he found that these cycles would return back to their centers. So for instance, this line here, this is called the median line, but can also be called as a center line as well. Okay, now he says that, you know, when he's using like the laws of physics, you got things like sine waves and stuff like that, and when he was drawing these lines out on the chart he was like, oh, this looks like a sine wave, and he done his more investigations and what have you, and yeah, and you know, he worked it out to be like this pattern that was emerging all the time. All right, so what it was is that you have basically your median line here. All right, and then when the market, this would be your point A. When the market goes up and comes back down, that'll be your point B, and that'll be your point C. What happens is that it generally comes back to the middle of the line. All right, and this point here to that point there is referred to as one cycle. Okay, and every time there is a cycle, it normally turns back and goes back to the median line. Okay, so this one here is actually referred to as an upward sine wave, and obviously vice versa when you have basically, you know, something like that. All right, that's a downward sine wave. Okay, so there's your A, B, and C. All right, and then it goes back and touches the middle. All right, so okay, so once that's been done, he's basically come out with these four principles that I was just mentioning earlier. And he says basically that when the medium line is drawn from the most recent swing, the price should actually return back to the center line or the median line around about 80% of the time. Okay. Now, when the price returns to the medium line, it's normally a pivot. All right, normally a pivot high or a pivot low. Okay, and we've already discussed what pivot highs and pivot lows were in the other video. All right, and price may also tend to hang around the medium line for a little while. Okay, before moving on. All right, so what that would mean is take that off. Let's go to my whiteboard for a moment. Okay, this will be your median line, and when the market goes up and comes back down and touches the medium line, it was basically saying that it will come back to this point around about 80% of the time. And he also said that sometimes that the price swing hangs around the medium line, okay, before taking off. Okay, he also mentions as well that the median line, if it doesn't come back and hit the medium line here, then it's classed as a miss, and you would then look for it depends. Actually, this one would need to come down for an upwards trend, and if it misses the top part here, then what it should do is that this is your point C here. It should come back down towards that area as your TP target. Now let's go ahead and show you what that will look like on the chart. And this particular one that I've drawn here isn't a perfect example. Alright, but coincidentally enough, you can see that how, you know, where the medium line hits there and it stays there for a while before taking off. Alright, but this one isn't a really good example because what was supposed to have happened here, but it didn't actually come through, is A, B, and C. And you can see where the market's come down, it's come back up here, but it's missed it. Alright, now here is your C area, and when it's missed the medium line, you can then turn around and actually target this line here. Actually, I have this on the 5-minute time frame. This is not good for the 5-minute time frame, so I didn't realize that, so I do apologize. Let's take this back to like the 4-hour time frame because the results will be a lot better this way. Okay, alright, let's go ahead and draw this again, and you can start seeing how this is starting to make a little bit more sense on a larger time frame. Alright, let's draw that from there to there. Alright, what do we need to do next? We need to take our crosshair tool out and count the bars. Okay, we're counting the bars, and there's 17 bars, so we need to come back, what's that, 8, 16, so it's come back around about 8, 9, do it around about in the middle there, and the pip difference there is 236, so that would be 118, so I'll come back around about 118, which is around about there. Alright, so get another trend line tool out, take it from the recent low, and I believe that's around about 118. Yeah, well, that's pretty close. Alright, and this one doesn't actually work out in our favour either, but never mind. A, B, C. And the market's gone up. and it didn't actually come down. Well, it did come down here. It actually missed it, but what this was supposed to have done is supposed to have come down towards C, but it didn't. So that's probably a fouled move there. So eventually you probably would see this move down a little bit lower. And then you can see it's actually coming back and touching the medium line, and then it drops off. Let's see if we can show you some more examples before we move on. I wanted to show you that fouled wave because that was a pretty good. Boom, boom. Okay, I think this is one. Okay, yeah, this is one. Alright, here we go. We take it from this high down to this low here. Alright, and we'll calculate. That's 15 bars, 455, so 227, which is about there, about 7 bars as well. So keep my eye on that. I'm going to go through around about here. I'll just double check one more time. And come back about 100. Did I say 200? Oh, I missed my place now. 227, did I say? Oh, that'll be okay for the most part. All right, just at least for this example that I want to show you, at least anyway. Okay. And here is our median line. All right, and here is A, B, and C. And what he was saying is the fourth principle is that when when you've got the sine wave coming up here, but it misses this middle line. Okay, it's actually missed it. Then you can come back and target point C on its reversal. Alright, this will be more truer on larger time frames than it would be on smaller time frames. Alright. Now that only means on the first time round. It does not mean that, you know, when the market goes up here and stops and reverses and hits our point C target, that does not mean that if it tries to go up again and reverse, you know, and reverses, it does not mean it will come back to point C, because you can see here many times it's tried to attempt to go up towards the medium line again. It did not come back down to point C. So this is only like a one-time deal. Alright, so give that a try. Okay, let's see if we can show you maybe a quick one for a downtrend, so you can basically get the hang of that one as well. Alright, now with the downtrend, you would need to take, this will be your point A, this will be your point B, this will be your point C. Alright, and then we draw the line from here to there, and then from here through like so. Alright, and then we can see how the medium line comes down. I'm sorry, it comes here and touches the medium line, goes up to complete that sine wave, then it tries to come back down again, and it misses that line. So what happens? It goes back towards C, and there's C there. Alright, fair enough, it didn't exactly touch it, but you can see that if you did actually go in on the next bar, which would have been probably maybe around about here, you could have got in around about there and took it from that point to this point. It was about 50 pips there. It's not a lot, but it's, you know, it's better than a kick in the head, right? So that's how you work out your downtrends as well. And now you can see that once it's hit its C, it does come back and touch the medium line and then bounces off again. So this would be in like another area to buy from. Alright, but you would need to wait maybe 2 bars. And if the bars are quite large when you've been waiting, like for instance, if this was the area that you wanted to go long from and you wanted to make sure, because the way that the sine waves work, they look like this, okay? And from here to there is like one cycle, okay? And then from here to there is another cycle, cycle 2, second, and then from here to there is a third. And you can see how they keep coming back to the medium line all the time. Alright, now this is the same principle here. Okay, it's come back up, hit the medium line, but it actually missed there, and it came back, hit this medium line, and it bounced off. Now when you get like quite long candles on that medium line, you would be better off waiting for some small ones like those two there, because this will just give you a better idea that the market is not going to keep on coming down, because the market sentiment, you can take a look at these candles here, they're quite large, right? And these ones as well. And then you start getting these little ones here. That's indecisiveness in the market. We already had one area of indecisiveness in the market, and then we've had the second one, and this time it's just decided, said no, we're not going to have this. All right, we want to go back up. All right, so I would wait for those two candle patterns to come in as two small ones, okay, and then wait for the third pattern, the third candle to come in, and it needs to be, a reasonably a large one, not too large, but larger than the ones that we see here, probably maybe double the size or 3 times the size or something like that, and it needs to be an up candle, okay. You don't want to choose a down candle. Now, it's not going to work 100% of the time, but majority of the time, if you stick with that, approach, then you'll do okay. All right. So, please watch that video maybe 2 times more, or one extra time more, so you can get the understanding of it. Okay, because you're going to need to have this in your mind for a little while longer. Okay. Well, before we get into the next lot of stuff, I'm going to start talking about the pitchfork and also the trigger lines as well. Okay, so I'll see you very soon in the next video. Bye for now.